So we are going to start with illustration 5 given on page number 68 in your textbook as I have written on the board. And lastly we have done sum number 5 and sum number 6 from exercise, which were related to illustration 3 and illustration 4. Now we are going to start with illustration 5, which is about the transactions of loss and goods going out other than sales, goods withdrawn for personal use, distributed as sample, donation. These are the other type of transactions. Yes, I have explained this concept previously. Yes, so you should keep that in mind and then you should solve this illustration. Yes, so hope you are ready with the specimen, and you will write down the necessary heading the way you do in each and every illustration and sum. Yes, so okay, write journal entries for the following transactions in the books of Murlidhar. Murlidhar is the owner. In the books of Murlidhar we are going to write. So firstly, 2014 May 1, 1st of May goods of rupees 1000 is withdrawn from business for personal use. Anything taken for personal use is always drawings. So drawings account debit 1000 to purchase account 1000. Okay. Why purchase account has been credited? Because goods are going out of the business. Goods have been taken for personal use. In this type of transactions, always purchase account is credited. Then 3rd of May, goods of rupees 700 destroyed by fire. It was not insured. Goods on which the company has not taken insurance, that means it is a loss. You are not going to get any amount from the insurance company because you have not taken insurance of the goods. Yes, so definitely this is a loss. Fine, then loss is always debited as per the rule of nominal account. Debit all expenses and losses. Yes, so the journal entry says loss on goods destroyed by fire account debit. You have debited loss along with the reason that the loss has occurred because of fire, because of occurrence of fire. Yes, so loss on goods destroyed by fire account debit again to purchase account, because the balance of purchase account is reducing. Whenever it is reducing, it is to be credited. Withdrawal of goods for personal use, goods destroyed by fire, anything. In all these cases, purchase account will be credited. The illustration is quite simple, so it is better we are doing it orally. In between, I will be writing down several journal entries, but not all. Then, goods of rupees 500 is stolen from business. Stolen from business. Now, this does happen. Even if you are having a CCTV, fixed everywhere, yeah, but you will get to know about it later. Then you will have to file complaint, and then the robber will be caught, and it's a long process. Yeah, so for now the goods have been stolen, so it is a loss again, and in this loss again purchase account is to be credited, because the goods which were purchased for the purpose of selling it after adding some profit, be it a business activity, have been stolen. So purchase account will be credited in this case, and what you are going to debit is loss on goods stolen account. So the journal entry for this is loss on goods stolen account debit to purchase account. Yes, then the next transaction on 8th of May, goods stolen received back of rupees 100 on police investigation. So in this case you are going to write down completely reverse journal entry. If goods are stolen, your journal entry is loss on goods stolen to purchase. If goods are recovered back, then you will just reverse it because the case is reverse. Firstly, they were lost, now they are recovered. So the journal entry is reversed. You can check purchase account debit 100 to loss on goods stolen account 100. So ultimately now your loss is only of 400. Yes. So once you give a reverse effect, the amount is balanced. You know, the way you do in mathematics, plus minus. If you want to add, you will plus. If you want to deduct, you will subtract it. Here the case is, if you want to add, you will debit it again. If you want to deduct, you will credit it. I am talking about purchase account. If you have purchased goods worth rupees 5,000, definitely you have debited purchase account. Again, if you have purchased goods of rupees 1,000, you will again debit this. But if goods are lost from this of rupees 2,000, then you will credit this. Yes, so ultimately debit में कितना हो जाएगा? 4,000 हो जाएगा. If you will credit, if you will give reverse effect, तो ultimately 6,000 में से यहाँ 4,000 हो गया. Debit 6,000 total. Now purchase account has been credited. मतलब debit 6,000 minus 2,000. Debit minus credit. Yes, so it is that logic. Then 12th of May, goods of rupees 2,500 is destroyed by fire. Insurance company has admitted claim for it. Now goods have been destroyed. Goods of rupees 2,500 have been destroyed. So this is a loss logically. But there is an insurance taken for the same. So this is not a loss because insurance company has accepted a claim that insurance company will pay. Yes. So insurance company is my debtor now. Yeah, so debtors are always debited. So insurance company account debit, be it a debtor, to purchase account. Obviously goods have been destroyed. Yeah, but for that the amount is to be recovered from insurance company. So instead of loss, we have just written insurance company account. Just that simple. Yes. Next. 15th of May, goods of rupees 4,000 is destroyed due to sinking of steamer, for which insurance company has admitted claim of 50% amount. Now, the total loss is of 4,000 and insurance company has accepted claim only of 50%. That means the company is going to pay only 2,000 out of 4,000. Yeah. So let us understand this. It is on 15th of May. So firstly, insurance company account debit. How much? 2,000, 50%. So total loss is 4,000, of which 2,000 insurance company will pay. So what is the loss now? Loss due to sinking of steamer. Please excuse me. 2,000. Yeah. And to purchase account. Overall goods lost are of 4,000. The goods lost due to sinking of a steamer is of 4,000. So total goods going out of the business 4,000, of which insurance company will give 2,000. Insurance company becomes my debtor, hence insurance company has been debited. Loss is always debited as per the rule of nominal account. So loss on sinking of a steamer account debit 2,000, to purchase account 4,000, 4,000. Amount debited is equal to amount credited. Yes? Fine. Next then, 16th of May, goods of rupees 500 given as donation, Donation is an expense. This is the journal entry of donation for the third time since we have started solving sums. It is extremely simple. Donation account debit to purchase account. So I am not writing down this journal entry. It is simply donation account debit to purchase account. Yes? Okay. And the amount is 500. Next, on 20th of May, goods of rupees 200 distributed as free sample for advertisement purpose. You have distributed goods for the purpose of advertisement. Free samples you have given. Yes, this is an advertisement expense. So first of all, it is an expense. Hence it is to be debited. What you have given goods. So goods are going out. You are not selling them. You are giving it as a sample. How many? 200. So whenever goods are going out of the business other than sales, purchase is to be credited. Advertisement purpose, you are not charging for these goods and hence this is your expense. Yes, you are advertising. Always, you know this. If you are giving a sample good, yes, you will not charge for it. Yeah, because it is a sample. That is what a sample means. Yeah. So advertisement account debit, advertisement expense actually to purchase account. Yeah. Fine. You cannot say this is ma'am, this is a non-economic transaction. No. I am giving goods as a sample, I am not charging for it, but those goods I have purchased by giving something in return. Something is money, yes. So it is having an economic value for sure. And also it is my expense, I am giving it with the purpose of advertising it. So this is an economic transaction. Yes, it is a non-economic transaction for the party whom I have given. Because the party does not pay in return. This is just a sample. Yeah? Fine. Next. Goods of rupees. The transaction on 22nd of May. Goods of rupees 400 received as a free sample from manufacturer. See, this is non-economic transaction. Because here some other manufacturer has given goods to you as a sample. As I said, we don't charge for a sample. We did not charge, so the other party who is giving us a sample is not going to charge. So this is a non-economic transaction from my side. My side is from our side, from the side of the owner, from the side of the party who is receiving sample. Here I am receiving. Who am I? I am Murlidhar, I am the owner. Yes, so this is a non-economic transaction. Transaction on 22nd of May. Then 25th of May, goods received on 22nd sold and realized rupees 300. So on 22nd of May, the goods that you have received as sample, you have sold it for rupees 300. Yes. So the journal entry for this is what comes in? Cash, and you have sold goods. So to sales account. Simple. Cash account debit 300 to sales account 300 again. Yes. Then 28th of May, goods of rupees 1500 is destroyed by fire. Insurance company has admitted claim of rupees 900. 200 realized from scrap of this goods. Total destruction of goods 1500. So one thing is very clear, that purchase account is to be credited with the amount of 1500 rupees. Yes. Further it says insurance company has admitted a claim of only 900. So insurance company account debit 900. Then 200 you have realized. that means 200 आपको मिला आपने goods sell किया तो. So cash account debit 200. So now what is my loss? Out of 1500, 900 and 200 have been recovered. 9 and 2 is 11. So remaining loss is only 400. Yes. Let us check the journal entry. See, total goods destroyed are of 1500 and hence purchase account has been credited with 1500. Now talking about the debit. Insurance company account debit 900, insurance company is going to pay 900 rupees. Over and above this 200 I have realized on sale of scrap. Yeah, आधे जले goods बेच दिए तो जो भी recover हुआ. So what is my loss now? Loss is to be debited 400, 900, 200 and 400. This is 1500 overall and also 1500 has been credited. Yeah. So again the simple journal entry. Then goods of rupees 600 destroyed in rain which is sold for rupees 200. So you have received 200. Cash comes in, cash account debit 200. What is your loss? Out of 600 you have already recovered 200. So what is your loss by rain? 400. So loss by rain account debit 400. What is total loss of goods due to rain to purchase account? 600. Simple. So here we finish illustration 5, which was about the transactions related to purchase account. I mean when purchase account is to be credited. It is given, the type of transactions are given exactly to the previous page to this. Page number 66 and 67 they have discussed about this. They say other forms of goods outward. So other forms is other than sales. Definitely goods are going out of your business at the time of sale of goods. But here they are talking about outward of goods other than sales. It is goods withdrawn for personal use, distributed as sample, given as donation, goods destroyed by fire and goods received as free sample also they have discussed. Then theft of goods from business. All these topics have been discussed on page number 66 in your textbook. The illustration 5 that we have solved, all the concepts that have been included in illustration 5 have been explained well previous to illustration 5, be it a part of theory. If you want to understand this in detail, you should go through this. Yeah? Okay. So we are done and let us check a sum of similar kind in your exercise. So we have finished sum number 5 and sum number 6. And then we have started illustration 5 and we are supposed to find out a sum of that kind in exercise if it is given. Unfortunately, you don't have any such sum in the exercise as far as I am observing exercise. Okay, that simply means that transactions of this type will be included in the sums anywhere, in the given sums in exercise anywhere. Yeah? Fine then. Let us see what's the next topic. Okay, on page number 69, just after illustration 5, the topic says transactions through bank. So this is a new topic and I think we'll start this in the next lecture. So let us just revise whatever we have done so far. So we have understood the meaning of journal, chapter 4 as per new textbook of standard 11 commerce. So as I said that this is the book where all the transactions of business are recorded. Yes, which is the very first step in the process of accounting. Yes, you have to record all the transactions. Yes. Transactions can be recorded by writing down a journal entry. This is how you write a journal entry. The process has been taught. This is the specimen of journal. You'll mention date, month, year, and you will debit this. This is the amount of, this is the column of amount, and at the end you will total this. Yeah. So you are writing journal entries in this chapter. But the entire concept, entire basic concept to this we have understood in chapter 2, which is dual effect of transactions and types of accounts. If you aren't aware of that chapter, it is almost next to impossible for you to write down journal entries, to write down a single journal entry in this chapter. As you can see, you just have to mention which account is to be debited and which account is to be credited. Yes? So, for this you should be aware of the facts that have been presented in chapter 2. Yeah, you should go through all the concepts, only then you will be able to write down the journal entries of this chapter. And let me clarify one more thing, that if you aren't aware of how to write down a journal entry, then trust me, you are going nowhere ahead of this. Entire accountancy is about writing down the journal entries, and of course there is a process ahead of this, but basic is this. The most important basic concept is this. Yes? So you should pay extreme level of attention, and still if you are facing some sort of difficulty that why this has been debited, why this is credited, then firstly you will have to revise chapter 2 thoroughly. Yes, because in that chapter it is clearly mentioned that this is to be debited, this is to be credited, and why. Yeah, with a brief explanation. If you remember the sums we have done, you'll mention the type of the account and you'll be giving a brief explanation along, if you remember. Yeah, so that's what I'm trying to say. So please go through that chapter, and then only you will be able to understand this. So we have understood about the meaning of journal. Then we have started with illustration 1, which was extremely simple. In illustration 2, we have understood about the concept of combined journal entries. Yes, that simply means that instead of writing down the separate journal entries, you will write down one combined journal entry. Yes. Then illustration 3 was about the transactions of capital and drawings. Illustration 4 that we have done was about the transactions of purchase of goods, return of goods, etc., etc. And on the basis of same, we have done sum number 5 and sum number 6 from exercise in your textbook from this chapter, which are related to illustration 3 and illustration 4. Then we have solved illustration 5, which is about other type of transactions, that is purchase, sales, the normal transactions, other special transactions. If you remember this theory, the types of economic transactions I have explained in chapter 2, the concept of theory. Yeah, cash transactions, credit transactions, and other transactions, internal, external, etc., etc. Yeah. So then comes the concept of transactions through bank that we are going to do in the next lecture. Yeah. So first chapter was entirely based on theory. So as I said that it was language of accounting. Yeah, you should be aware that yes, this party, that this is to be termed as a debtor, this is to be termed as a creditor, this is capital, this is drawings. What is capital? Capital is anything introduced in the business by the owner. Drawings is anything that is withdrawn by the owner for personal use. You see, all the terms have been applied here practically. I used to say this in every lecture, that no doubt this is the first lecture, this is completely theory. You might be feeling that it is little bit of boring and difficult to understand. But once you will apply those concepts here practically, things are going to be extremely easy. Yeah. So entire theory application is in the practical sums now and also ahead. Yes, what if you don't know the meaning of the word purchase? Purchase, you simply know that kuch bhi khareedna, but kya? In terms of business, it is holding a different meaning, that this is purchase of goods. This is goods going out other than sales. This is goods going out for the purpose of advertisement. Yes, then expenses, they are to be debited as per the rules of accounts. Personal, real, nominal types of accounts. Personal, impersonal. Then further in impersonal accounts, it is real account and nominal account. Yes, and we have also learned about the rules of these accounts, rules of debit and credit. Personal accounts, what is included in personal accounts? It is legal artificial person and a natural person. And the rule for which is debit the receiver, credit the giver. Ahead, real account. Debit all expenses and losses, credit all incomes and gains. Yes. What is included in real accounts? It is all about goods and assets. Yes. So all the accounts of goods and all the accounts of assets are a part of real account. Debit what comes in, credit what goes out, and lastly the nominal account. All the expenses, incomes, loss, gain, everything is a part of nominal account. Yes, and the rule of debit and credit for nominal account is debit all expenses and loss, credit all incomes and gains. Isn't it? So you see, this is the base for writing down a journal entry. We have learned so many things. Yes, to learn how to write a journal entry. Previously, we have learned so many things, and all together from the very beginning, we have applied it all together in this chapter. Yes, everything, the theory concepts, the types of accounts, the rules of debit and credit, whether it will be debited, whether it will be credited, everything all together has been applied, and a journal entry is written in chapter 4, journal. Yes, the reason behind choosing this chapter directly instead of going in order with chapter 3, which is GST, is only this, because chapter 2 is closely related with chapter 4. Yes, everything that you have learned in chapter 2 is simply presented in the form of journal entry. The last concept learned in chapter 2 was that which account is going to have debit effect, which account is going to have credit effect. Yes, that is what we are doing here. Yeah, we are writing it one effect as a debit and other as credit. Yes, so this is all about chapter 2. Yeah, that base was formed in chapter 2, which is applied practically here. Yeah, so now by now you know how important it is to learn this subject from the very beginning. Yeah, from chapter 1 followed by chapter 2, then chapter 4. Obviously chapter 3 we are going to do later. Once we are done with chapter 4, or in between, we'll understand the concept. It is completely based on theory again, and we are also having several sums in chapter 4 related to chapter 3, for which the explanation of theory is to be given in between of this chapter. But the only request is that you should follow, and you should follow the instructions given, and you should study the lectures in order. You should be aware of chapter 1 before you proceed with chapter 2, and obviously you should be completely clear with chapter 2 once you want to start chapter 3. So still, if you are having some difficulties, or if you are facing some difficulties in understanding, then you should firstly go to chapter 2. You should watch the video lectures, and then you will be able to understand chapter 3. Yes. So fine then, in the next lecture we are going to start with a new concept, which is transactions through bank, which is given on page number 69, and on those basis we are going to do illustration 6, which is given on page number 70. Alright then, we'll see you in the next lecture. Till then, stay home and stay safe.